Hello, today is October 13th, 2018. My last call said that Thursday's pattern had the early low, late high, tended to rally into the close. And when that didn't happen, we didn't take out this high, it should lead to lower prices. Well, we gapped smartly in the undesired direction. So that was killed from the open. This looks like an impressive rally, but I'm not impressed. Doesn't mean we can't go a bit higher, but let's look at what's wrong with it. First of all, not filling the gap is not something to be happy about. That gap should fill at some point. This spike low has to be retested at some point. Didn't happen. We rallied all day long after gapping up and hitting a higher high. Couldn't close over any of those highs. We have a wall into the close. Now, a rally into the close on Friday will often continue Monday. And for the short term, a lot of these negative things get canceled if we gap and promptly take out this high. I can't say it's impossible. But if we gap under these lows, which I'm not predicting, if that happens, it means this whole rally's false and we drop all day long in a straight line. Monday's patterns like this one, the one with the early low, late high, dropping all day leads to further declines. If we don't get an early drop, it tends to rally. The only thing we got out of MEJT was enough. It said ultimately lower prices would print, but the move was false and that we'd recover over this line, which we did. Note the reversal right at the MEJT resistance level. Well, I really want to spend more time on the long-term pattern today because I have an important call. In the last fiscal year, we only have 5 MEJT targets which have not printed. That number is going to be reduced at some time because eventually we'll cross either some of the higher or some of the lower targets off the list. And that's about right. In a fiscal year or a calendar year, you should see maybe 2 or 3 MEJT targets which don't print. Don't forget, not printing at a change in trend or a strong impulsive move is part of the system. But 2 or 3 a year since the system was devised in 2002 is about it. As far as ultimate targets not printing, on average until the rally from 2016, it was about 1 failure every 2 to 3 years. We get about 150 of these targets a year. 1 failure every 2 to 3 years, 500 of these targets, non-ultimate, and usually 2 or 3. And the reason that's important is that until the rally from 2016, those numbers were pretty constant. There are too many failed targets in this rally, and the system says at some time a good number of them are going to be seen again. Now, I haven't paid too much attention to DeMarc's stuff. I mean, he called for a sell signal way here early in the year, but it never got invalidated. It took years to print, and with the longer the time frame, this is a monthly chart, the more significant the signal is. It's particularly significant when the monthly, weekly, and daily are all in alignment. The monthly remains on a sell. The weekly, 913.9 remains on a sell, was never invalidated. The daily is in alignment too. We never invalidated the sell signal. When all these 3 things are in alignment, it tends to mark the end of the move, not just the end of a leg. There are some positive things in Friday's action. We had this volume spike, often that marks a low. It has for years, but even going up for years. Typically, when you get climactic volume like this, at the end of a big drop, it means everybody wants out. When all the sellers are gone, market can go up. But this is climactic volume after the end of a 9.5-year bull move. When everybody wants out, I'm not convinced it has the same implication. I think this long-term monthly chart makes a good case based on trend lines and Fibonacci that this high is going to be around for a long time. I think these trend lines we've shown many times are saying the same thing. So I'm changing my long-term count to say we now think this ending diagonal triangle is the end of wave 5 up, and that the move from 2009 to September 2018 in all likelihood has ended. Now that's not the only way to count it. I mean, this could still be B, and that could be A, that could be B. But I'll tell you why I've changed my mind about what the preferred count is. Part of the reason is even when we had a strong rally yesterday, breadth continued to plummet. It means only a few stocks are making the move higher. But the real reason is that at major changes in trend, nobody believes it. If this is a top and everybody were calling a top, I'd feel maybe it isn't. But people who've been wrong on the count for a long time insist on sticking with a count that is wrong. I'm not going to pick on one guy, but here's one count where he's calling this wave a 1. It's a 3-wave structure. He's calling this wave a wave 3. It's a 3-wave structure. Let's take a look at this. He's convinced that's the end of wave 4, but he's so positive on the market, he's calling this wave 1. How is that wave 1? There's no 5-wave. It's a 3-wave structure. Let's go over why I have changed my count in a long time. Let's suppose that the only wave you saw was this one. This is a wave a lot of people are calling wave 1. Is there anyone, if this were the only wave you saw, who would call it an impulsive 5-wave move? It's impossible. That can only be counted as a 3-wave structure. And if it's a 3-wave structure, it can't be wave 1. I've seen this called an impulsive 5-wave moves any number of times. This wave is a 3. This whole thing is a 3. There's no way to count it as a 5-wave. And even though this last bull move up was a 5-wave structure, this can only be wave B. It can't be anything else. Suppose this were the only wave you saw and you didn't see anything else. I suppose you can count it as a 3, but I think anyone would say it was an impulsive 5-move structure. It can be something else, but if you have to fudge, if you have to guess, if you have to contort waves to make them say what you want them to say, if you have to force the count's most likely wrong. And that's a 5. If this is B, this cannot be a symmetrical triangle because symmetrical triangles don't occur in C waves. That means this couldn't be a symmetrical triangle. And even if it were a symmetrical triangle, if we rallied out of it, it would have to be a 5-wave structure. It isn't. Here's a clear count. Here's a clear ending diagonal triangle. It's clear this whole rally has been 3s. And when you have a long purple 3, it's perfectly fitting that we should have a short purple 5 with a clear, no fudging, no trying to figure out what the waves are, ending diagonal triangles to end the whole bull move. Now, how low could we go? Well, if someone said back when we were at 669.79 for the low, how high could we go? I think it would have been impossible to predict this. And I think it's impossible to predict how low we go now, but we can have some minimum targets. At a minimum, the beginning of the ending diagonal triangle should be seen. That's under 2600. This spike low has to be retested at some point, and that's not close enough. And that's in the 2500s. But there are simply too many failed MEJT targets in this move. And based on the system, we have to have a larger retracement. And no one can be positive how low we're going to go. But let's make a guess that we're going to drop over a period of months to years, hit 1817.5, a huge drop, and we'll see if that works. And because that's my target, I'm going to ignore any bull signals we get. And even though I usually trade one day at a time, I think this is a reasonable place in the pattern to ignore the buys unless you're a very nimble trader and stick along for the ride on the downside. And that is today's call.